Welcome. Hey, everybody. We are here today with Mythodical Man, not to be confused with Method Man.
Exactly. Two different people.
Exactly. Two
Close-
totally different people.
Close relative, though.
Okay. Yeah. Like a brother?
Yeah, brother for
Okay.
sure.
All right. Yeah. Well, thanks for joining us. You've been
no
trading
problem.
with us.
Thanks for having me. Yeah.
Cool, man. Yeah. If anybody doesn't know, Mythodical Man, he's got a real cool YouTube stream. He streams every day, right? And another trader. We're gonna hop into his charts and stuff, and he's gonna kind of show us what he does, how he looks at the market, and what kind of trades he takes. And hopefully, you guys can glean something from it. Also, we will be having a giveaway like we always do. That'll be after we get 50 likes. We'll drop that link, and you guys can sign up. No purchase necessary or anything like that. And it'll be a couple $200 credits to the desk. So you can use that however you want towards the assessment. Yeah, and down here, I'm not a sales guy, so you have to bear with me, but we have a 70% off running right now, guys. On static accounts, 50% on EOD. So for sure, that's our best deal we've ever done to get you guys on board to start trading with us. So use it as an opportunity. Join the Discord. Just check us out. We're doing things a little bit differently here. We're really actually trying to back our traders. We've got a lot of cool tech coming down and stuff. So yeah, come be a part of the TFD team. Get into a real live brokerage, not this sim funded forever stuff.
Yes,
All
sir.
right, with that, let's hop over to Mythodical Man. So let's hear a little bit about yourself. How long you've been trading?
Well, I've been trading about a little over 3 years. I've been streaming for a little over 2 years, and just kind of came to futures from the penny stock world. You know, did the penny stocks for a little while. Wasn't very successful in that.
Was it penny stocks like NASDAQ like around $1, or like penny stocks
like under $1, low float, high volatility type stocks? But didn't really enjoy that. Didn't know anything about futures. Found out about futures from another streamer, and basically was like blown away by the fact that you could just trade the same chart every day. You didn't have to wait for an alert or find a stock. You can just log on and read price action and take trades. So really liked the sound of that and jumped
Sure.
right in. That's kind of how I got started.
Cool.
So,
Awesome. So you've just been doing it ever since. When did you start hopping on stream? Was that before or after futures?
no, it was after I started trading futures, and then I was originally on the ES, and I thought whoever traded NASDAQ was they had a screw loose. But eventually, as you get more experience, you migrate over to the faster ticker there, and I really love NASDAQ. Could never go back to ES now. So I started the stream because so I worked full time. I was a cable installer for approximately 15 years. Sold my home, took the capital from the home and gave myself 1 year to try to make trading work. Started streaming to supplement kind of the income side of things. Did DoorDash, did Uber Eats, did all the little gig work type stuff in between to keep supplementing. And eventually, we became profitable, and here we are.
Awesome. So, that's really the I think that's the story of half the traders that are coming to us. A lot of them are in jobs already. They're trying to find a way to commit to trading and find some edge that gives them consistency. It's cool to hear your story because you're an example of that. It's working out for you. You took a big risk there. With the house. I mean, but sometimes that kind of a risk forces you to be a little bit more professional about it and not just wishy-washy about your strategy and what you're going to be doing.
Well, full transparency, I dug myself a hole as far as getting started. I went deeper into the tank than I probably should have, but I dug about a $35,000 hole before I started making money. But we regained that. It took us about a year to kind of become profitable, and then we regained that pretty quickly. And now we're in the black. So that's just
good.
I would not suggest doing it that way. If I could go back, if you could always go back, you would do things differently, make different decisions and things like that. So it's one of those things where I put risk on the table far too soon, ahead of experience, and that's not the way to do it. You really want to have that strategy down before you even need to put skin in the game per se. You can just be on a sim account and it's just fine. But yeah, it's not necessarily the way I did it. But
yeah, I think a lot of people get overzealous. They get a few wins under their belt. They're like, I can do this full time, and then you put the risk on, and for sure, you do it differently now. But that's because you know how to trade.
Yeah, exactly. And I can tell people, from experience, like, hey, don't do it that way. I mean, you're your own person, but if it were me and I could go back, there's no reason to dig that hole. You can really keep risks small until you get comfortable, and then you can put on some more risk and then just kind of move forward. But
we found that was very true. There's sort of different levels of it. Obviously there's the no risk, but you have to figure out, okay, how's my platform work? What is my strategy? Does it work under no stress? That's sort of that first stage. And that's that we've got these practice accounts, which, a lot of firms have practice accounts, but now we have a way to just go to a practice account only. You're not thinking, I'm going to get paid from this. I'm going to get an assessment that I pass and I'll get to that first payout. That messes with your mind, especially when you're newer. So those practice accounts that we have let you put just slightly a little bit of stress on because they're not free. They're like $20 or something like that. But then, use our system to do all that for sure. Yeah, that's cool. How would you classify yourself as the types of trades or the strategies you?
I am a scalper. I'm someone that needs to see a high win rate, and I usually take 10 to 20 points. With a mini, I'm a little more high risk. I probably put on more risk than I should, but I just take scalps, and so again, just looking for 10 to 20 points a day. And I try to limit my trades to just one trade per account per day. Sometimes I deviate from that rule, but for the most part, that's what I try to do. So, for the most part.
So is a lot of weight. So you're taking a lot of trades. Is it around very specific levels? Are you waiting a lot, or are you finding very small, little like traps and scalping opportunities like that?
I trade several different strategies, and I don't recommend this to anyone that's new, but I have several different setups that I look for. My bread and butter is I love inversion plays. So we had one this morning. It actually aligned. It's right here on the 3-minute chart. it actually aligned with a 5-minute inside bar as well. So you can see we swept down, we swept the lows here to the left. So we kind of swept, I wait for a sweep of liquidity. And so we swept these lows here, came pretty close to this one, didn't quite get there. And then we had a V-shaped type reversal back up. And that's kind of what I look for. And so I took a long this morning, right around that 540 level. And I rode it up to the 565 level there. So I took it for around 25 points.
So are you typically like although you're taking a lot of trades, you're waiting for a certain amount of confirmation on that right side of that V?
Yeah, for sure.
Sweep, for sure. Great common setup. And I suggest a lot of people look at this kind of stuff because it's, there's a lot of different ways to look at it. Volatility is increasing, so it's running a lower low. You know what I mean? Liquidity sweeps. There's a lot of ways to say it, but generally speaking, this pattern plays out a lot. So you're looking for that kind of confirmation before you get in. And then
it's an inversion. It's an inversion play. So we had a 30-second and a 1-minute gap lower, but I waited for all the gaps to close above for extra confirmation. And then I took the long, so that's kind of what I do. And we had already inversed. So I just play inversion. So basically an inversion is just a fair value gap that gets closed above. So instead of shorting kind of a fair value gap or longing one, I'm waiting for them to get wrecked because the theory is there's a lot of stops sitting, above or below the gap that gets closed because a lot of people are shorting these gaps and they're going to put their stops up here. So, price tends to accelerate through that. So on the day, I thought we were bullish. I was really looking for the overnight high 629 up there. You can see we just tagged it. So these types of plays end up being the highs and lows a lot of times. So if you're long from 540 here, it just tags 629. Now, do I have any FOMO that this went to 629 and I took profit at 565? No, I don't care because I don't need the entire move. I just need a little, just a little snippet. Yeah. And that's it.
And the other side of that, getting the snippet's great. And everyone talks about, well, how do I squeeze out the rest of that move? And you can, and there's definitely, if that's your strategy and that's working and you're tracking it, it's awesome. But what most people wouldn't see that when you're taking your profit right there, sure, on this chart, FOMO might kick in for a lot of people, but for a lot of scenarios, you're going to get a pullback. Are you willing to sit through that pullback? Is it going to come all the way back to your entry so you can try to make that bigger target? Again, your strategy and your tracking and what you're doing might make sense, but I like that you've got that target, you stick to it, that's your trades, that's your scalp, and you've kind of ascended to away from what doesn't always work for you.
Yeah, so that's my main strategy. Another thing that I do look for is the first inside bar on the 5-minute chart. So I flipped over to the 5-minute chart here, and the inside bar, if you guys are unfamiliar, is just a bar that stays inside the high and the low of the previous candle. So you can see I had a little extra confirmation here with this inside bar. It prints white on this chart. And so that gave me a little extra confluence as well. The inside bar play is very, very nice. Works really well. Something that you can watch. This is very simple. And the reason why I use more than one strategy is I typically take my funded trades only on one strategy, but you're not necessarily going to get those trades every day. And so if I'm trying to trade evals, I throw in a couple of different options, for an eval play that maybe I don't take on my funded account. Maybe it's a little bit lower probability, but still good enough to take on an eval, that type thing. But I generally try to separate the trades,
So you're reading. So this is your whole. You don't look at any other analysis as far as price action or volume or anything.
I don't look at volume. No, I do watch news. Yeah, I'm not going to trade around news, in and around news. I avoid news, but for the most part, we're looking for sweeps of liquidity, an inversion with a V-shaped recovery, and we just target liquidity on the other side. Right. And today, very choppy price action. It looks cleaner here on the 5-minute, right? But if you go down into the 1 minute, it's pretty rough looking.
You're following the 1 minute?
I follow all time frames. So I've got the 30-second, the 1 minute, 3 minute, 5 minute, 15, hourly, 4 hour. Okay. I got them all pulled up. And we're kind of looking for confluence on every single time frame.
Sure.
And just looking for a spot to take a trade. But I did think today's draw on liquidity was correct. And a lot of times what people misunderstand, in my opinion, is if you got the draw on liquidity correct, that's half the battle. right? If you kind of know where price is going to end up going, then that puts you in a much better spot to take a winning trade.
And waiting, right?
Yeah, exactly.
People put the levels on their screen, but then they're just taking random trades outside of their strategy. Yeah, without being patient.
Yeah. And another small strategy that I use this mostly on evals. I like to mark out the open and close. And then I like the first test of the close. So kind of no matter if I think price is going higher, which I did here. I mean, you can see that first test of the close level. I mean, it gave us 11 points, and that's what I would look for. I usually have like a 10-point stop off this level. So this one here actually paid more, down to 22 points. But I'm literally looking for a 1-to-1 off the close level for 10 points most days. I did not take that trade today. I was like 50-50 on whether I was going to take it. And of course, it worked and I didn't take it. But at the end of the day, you got to, like I said, we were kind of already green anyway on that account. So we didn't really need more. So
you're saying are you talking about just you and your community when you're streaming together?
I refer to me as we. So
okay. Yeah.
I don't encourage anybody. I don't encourage anybody to, you certainly shouldn't be copying anybody's trades. And I don't consider myself a teacher. I just show you what I personally do on my stream, and you make your decisions from there. But I don't consider myself a teacher at all. So,
well, you're teaching indirectly.
Yeah, it is. It's just kind of showing what I'm looking for. But I also mark out initial balance, so the high and low for the first hour. I mark out the 15-minute range break. So these are the bars that you see on here. And then I do have the 50 EMA, the 21, and the 9. I don't necessarily use those a lot. But again, sometimes I will take a 50 touch. It just depends. But the main strategy I'm using on my funded accounts is the inversion plays. That's the one that I have the highest confidence in. And so that's typically what I use for my inversion, for my funded strategies. So,
and just to summarize that again, that's a higher time frame liquidity run.
Yep.
And then a
liquidity
reversal with enough gap fills.
And we go down to the lower time frame to look for entry. So if we sweep down right here, if we go down to the 1 minute and we look at this play that I had marked out, so you can see we closed above the 1 minute here, but then we kind of manipulated back below it. So this is the reason why you should be waiting for multiple time frames to close above. Once they all finally closed above, which was over here, then we kind of had that acceleration higher. So, but until that happened, so you can kind of get trapped sometimes on the lower time frames. Now, I will be honest, I did take this trade here and it lost. But then I waited for the second entry and we made our money back. That's just kind of how it works sometimes.
Yeah, the funny thing about trading and traders is just wanting to get in early to that move and not appreciating the fact that for the amount of time that you're seeing on that chart that it sold off, you would have been wrong every single time. So to think you can very highly consistently guess early on where the reversal is actually going to happen and manage your risk is extremely difficult, but it feels really good when you nail it. And that'll stick in your head, but your probability on those reversal trades without confirmation, which what you wait for, which is great. It's just a totally different thing. Right. And people need to have that distinction of like, look, you can take those kind of YOLO trades where the market's going against you entirely. It's coming up towards your level and you can just blindly take that level. There's nothing wrong with that, especially if you have some good stats that show that. But the way you're doing it and looking for reversals, I love that you're waiting for enough confirmation and you're still able to get your moves. That's the good example I want people to see is you don't have to be the absolute first person to spot the reversal. Your chances are going to be low. You don't want to sit there resetting evals until you find the bottom. Wait for a little bit. Wait for the buyers to step in and put some money in, and then join them.
Yeah, the classic kind of thing is you don't want. Do you want to be the first person to the party, sitting there with no one around, or you don't want to wait till everybody gets there and then kind of show up a little bit, fashionably late. So, but still have a good time. So, awesome. Someone's asking in the chat. I don't trade micros, RTA. I don't see anything wrong with trading micros. Certainly, micros are going to be a safer option. What I found for me was that micros caused me to overtrade, because I thought that I would feel like, oh, it's only a micro. It's only 2 micros. So for me personally, minis work better. But for most people, I would say in general, micros are probably the best option. I use a very tight stop loss. So
that's the key.
If 10 points and I'm out, if I'm losing 10 points, I'm out of there. So
micros or minis, categorically, what I like to tell people is it's not about micros or minis. It's about sizing appropriately for your risk. So what's your risk per trade? What's your risk per day? What's your risk per week? If your risk per trade and you take trades that need 40 points of movement on the stop, like taking minis and account sizes that props generally give you in the first place is way out of control. But if you're taking 10-point moves, you have a really good discipline to cut your trades. It's totally fine to trade minis. You just need to think more in terms of dollar amount per trade and then work backwards. So dollar amount per trade should be influenced by your total drawdown and your daily loss. And then decide your product in terms of micros or minis. Don't rush to, oh, I'm a mini person or I'm a micro person necessarily. In Methodical's case, he's taking 10-point, 1-to-1 moves a lot.
Very quick.
So minis can be okay in that scenario.
And it's, it's a sniper type entry. So I'm either right or wrong very quickly. Which, that's, I know how good that feels too. You get to know you're out and you don't have to worry about your emotional state escalating over a long period of time. It only has a certain amount of time to catch up. Yeah, so, I know my personality. I'm not a 2R trader. I'm not a person that can most of the time hold for 2R. Mm-hmm. So I tell people this all the time. It's, you can take one strategy that one person's being successful with, and you could give it to 10 other people and they may not make money. It's just, chart time, number 1, and personality, number 2, is going to control whether or not you're successful. I can't, my personality, I can't hold for a 50 point, 60 point, 70 point trade. And I know that. So that's how I framed how I trade, just based on my personality. Everybody's different though. So
yeah, these are the things we're pushing on people and coaching and stuff. It's playing out with you. We didn't coach him, but I'm just saying this is an example of he's figured out himself. He knows he's a piece of the strategy itself, and he's not going to fight who he is and what works for him. There's a million different ways to find strategy and edge and R&R and all that kind of stuff. But yeah, I'm glad you found a pocket. Another thing that he's showing too, which you can correct me if I'm wrong, but he's looking at all these time frames. This isn't 100% objective strategy.
Right.
It's hard to find an 100% objective strategy that actually is an edge, where you're like, no, I just wait for an inside bar and then I take the entry and it's 10 points and that's all I had. He's looking at the overall market. He's looking at multi-time frames. He's getting a sense for our buyers showing up to the game here on the right side of the V. It's going to present itself differently every single time he sees this strategy. And it's his intuition that he's building up with chart time that's allowing him to make those discretionary calls to get the results he's wanting. And that's always something you have to refine. But I like to think the most of the better traders I see are sort of like 80% objective, and then there's like a 20% discretionary, and that's the special sauce, is that 20%.
Yeah, there could be. I mean, we could be trading the same strategy. There might be a trade that you like that I don't like, and it's just chart time. I mean, you're not going, like I said, you're not going to always see the same thing. Mm-hmm. It's just kind of how that is. Man, we are getting a really deep pullback here.
Yeah, look at that.
Just kind of hit that midway point.
We got news running?
There's a 1 o'clock bond auction, but I think it's only a 5-year. So that hasn't hit yet, unless something else came out.
Did Trump tweet? That's always the question.
And I do like to use fibs, guys. I like to measure the moves with fibs.
Okay. So fibs gives you so if you're saying you're going for.
So I like to long in discount and short in premium. That's just a very easy, and those could be determined in different ways. Like, your discount may not be mine, and so on and so forth. It depends on how you're measuring. But that's just kind of one of the things I try to implement in my trading to keep me out of trap trades.
Sure.
So,
so
that
then,
sort of thing.
So a couple of questions I have. One is you mentioned sort of like a fixed, I have a 10 point, 10 point,
Mm-hmm.
1-to-1.
Yep.
How has that changed, or how do you deal with that as volatility in the entire market is going up at a macro level? Are you having to adjust that? Have you thought about using something like an ATR just to get a gauge of like this?
We do. I don't typically my chat lets me know about the ATR, but the ATR is definitely something that we think about. But in general, I mentioned earlier that I went down to micros earlier in the year. Think about the volatility that we had right when Trump came into office. There was no such thing as a 10-point stop. So at that point, I mean, as soon as I recognized that, I went down to the micros. It was doing pretty well with it. But once volatility
spread, by the way.
Yeah, that's insane. Once volatility,
not actually, I'm just joking.
Yeah. Once volatility kind of slowed down, then I just realized I was taking way too many trades. Like I would have a $600 losing trade on micros, and to me, I thought that was insane. I was like, "Why? Like I don't understand why I'm doing that." So it was just a mental thing. I was just over trading. So
saw that a lot of people not adjusting, but it's good you found that.
And so then I went back down to mini or up to minis and reduced it back to a 1 trade per day thought process, individually trading the accounts, not copying 20 or 30 or whatever at one time. And it's made a big difference. Nice. So sometimes, that's the thing with trading. Sometimes you're going to go backwards, and you got to recognize that. You got to, the market's ever changing. So if something's not working, you got to make an adjustment, to go along with the market. And
saw a lot of people last year doing well, couldn't adjust this year at all. They just wouldn't make the adjustment. They're like, no, I do these minute points. I do this much size. This is who I am. I identify as this kind of a trader, and it kills them. It's just the market doesn't, everyone says it's cliche, but the market just doesn't give a shit. It's going to do it. It's a collective of massive amount of money and making massive decisions. So to think that you can just say it's always going to be this way, and this is what I do for the rest of my life, it'll never work that way with the markets.
Exactly. So nice little pullback there. I mean,
sure. So the fibs, if you're looking for, buying and selling in liquidity zones, major liquidity zones, where do the fibs come into play?
So I only fib the current session. I don't care anything outside the current session. So if I'm looking to buy in discount and sell in premium, then I'm only concerned with this current price leg. That's the only thing that I'm concerned with. And overall, I know the market is bullish because the higher time frame tells me so. So if I go to the hourly, we can see that if we zoom in here, we got a nice 1 hour inversion here. So we left a little gap there. Price very V-shaped back up, inversed above it. And so I expect it to run the next swing. Well, what was the next swing? 629, which is exactly where we just tapped. And I've got the previous day high. I think this is Friday's high, 650 marked out up there. I wouldn't be surprised if we ran that, but that would kind of be my anticipation. Yeah. You kind of have that.
And then you'd be anticipating still short. You're not necessarily looking for a continuation.
Well, it depends.
Looking for a right side of the V. Okay.
So one of the things that I tend to try to think to myself is if we're at all-time highs, right? I anticipate us running all-time highs. So in my opinion, it makes more sense to wait for a long than it does to short. Now, will I short? Yes, I'll still short. But in general thinking, I think it's safer to look for longs than it is to look for shorts. Now, here's the thing. Can you pick a top and be right and make a lot of money? Sure. But how many times are you going to be wrong and you're just going to get squeezed? So as long as the hourly is still bullish, and ES, I love to watch ES as my confluence. I don't watch YM, but I do watch ES. ES is currently only less than 20 points away from all-time highs. So my anticipation is that ES runs the all-time highs first, and then maybe NASDAQ gets a little bit of a correction to the downside. So until then,
I look at similar. I'll look at those two markets as well. So in this specific case, even if it's not running, if I start seeing it pressuring, like we're building a wedge into that all-time high and the NQ's struggling, but you're starting to see buying come in, super great opportunity. Exactly what you're saying for this trade. I like that. I like that setup. So go ahead.
Yeah, I was just going to say, I don't really see anything here. Like, we hit discount here. I don't blindly just buy. Obviously, I wait for some sort of setup to, indicate that we're going to continue to go higher. Right now, we do have, well, not really. We have a small gap here. I was going to say we have a 5-minute inversion back to the downside. It's so funny. As you can see, these little teeny gaps, like this gap is not obvious at all, right? It's not obvious, but price is kind of holding it. It's just holding it here. Just wick below it, kind of recovered it. Once price kind of closes below this, maybe we push back down to the lows. 500 might be in play at that point. But does that mean that I'm going to short it? No, I'm probably not going to short it. Just going to wait and see until we get another long opportunity.
Right.
So
yeah, I think being above all those gaps from that liquidity run earlier obviously gives it a little bit on a long bias, sort of a line in the sand.
And I like to say, like, when you see V shape like this, I mean, it's hard to short, right? When you see, like, even on this 5-minute time frame, it just looks too V-shapey. Looks too bullish. So, and again, the market doesn't just go up. So is it unreasonable for the market to come back, rebalance this kind of area, and then go back up?
Sure.
It's completely reasonable.
Yeah, well, I like to look at it on that V. It's like we don't, there could be plenty of sellers at the top, plenty of sellers right now. But what we do know was when price moved down there, buyers showed up. Buyers said this is inexpensive for whatever reason, and price shot up. So while price could get back down to there, and people think maybe sellers will speed up, maybe buyers will speed up, I don't know. But what I do know is, based on the last occurrence, buyers showed up. So I'm going to assume they're still there until I'm proven differently.
Yeah, it makes a lot of sense. Let's see here. Someone asked me earlier, they were saying that if I'm not a teacher, they think that my community still follows me or learns from me either way. Yeah, so what I'm saying there when I say that is I don't consider myself a teacher. If you learn from something that I'm saying, that's completely fine, but I'm not trying to teach you how to trade. That's kind of the thing that I'm pushing out there. You can, I believe you can trade. You can teach yourself to trade. There's a lot of free information on the internet. I'm not really a super fan of like courses or things like that. I don't think they're necessary. Unless you just want something that's just compact and kind of put together for you. You're a person that would rather just kind of go to school type deal and learn from a course. That's okay. But I think everything is free on the internet, and nothing beats, chart time, obviously.
Finding your own patterns for sure.
Yeah.
Obviously, there's the basics of futures. Those are great courses to take just so you understand how contracts work, products, those kinds of things. I would tend to agree. A lot of courses are not needed. The harder part is, though, sifting through all the garbage of what traders are trying to oversell you on. Methodical Man's not trying to sell you on a course. He's not doing any of that. He's like a professional poker player, and he's letting you watch him at the casino. He's like, hey, this is what I did.
How do you know I play poker?
Do you really?
Oh yeah, I play poker all the time. Do you see what the hat says here? Do you see what the hat says?
Go gamble. Okay.
Go gamble.
Good. So that's referring, guys. That's referring to poker. That's not referring to trading at the futures desk. Go gambling.
Definitely referring to poker.
Sure. That's cool though. Yeah.
I wanna.
You go in person or are you online a lot?
Online. The closest casino for me is about 2.5 hours. So, but we played in a small poker tournament last night. We took first place. Let's go.
Oh, nice. That's awesome.
First place.
I've been wanting to get into online poker. We'll have to talk about that offline.
Yeah. Poker's a lot of fun. And it kind of has a weird correlation with trading. It really does.
Sure does. There's a really interesting, a lot of hedge funds and institutions actually use poker as a way to train people to understand how that works. You're making statistical decisions, and you're having to kind of read the room, which is very similar to the markets. You're having to get a sense of which way you think the market's going to go based on all sorts of different types of conditions, news, that all plays into effect, having that contextual awareness. So there's a video I'll have a Raj drop in the show notes, but it's a hedge fund explaining how they use poker as a introductory kind of onboarding step to their firm.
Yeah, one of my friends who has never played poker before, but he's a trader. He's actually he's learning how to play poker now. So
nice.
And that's actually a quick story. That's where the name Mythodical Man came from. My best friend used to always make fun of me and say that I'm so methodical with how I play poker. We play poker together for years. So like how I move my chips, my expressions. So I used to say that all the time. So he's literally the person who inspired the name Mythodical Man. So
the cool thing about poker compared to trading is, yeah, there's the video. We'll put it in the show notes, but great. It's a cool video. Very high level overview of how they're using poker with trading and teaching their guys to trade at the institution level. So what was I going to say? Yeah. So guys, we hit the like count. So Raj has been dropping the link in the comments. If you click that link, you can sign up for the giveaway. We're going to be doing two $200 credits. You can use them however you want. If you're an existing trader and you need a reset, hopefully you don't, but that could do it.
Come on, guys. Let's get in the giveaway. $200 is a big deal.
There you go. Awesome. Yeah, I like you're not trying to sell anything. That's refreshing.
Yeah, I'll never sell a course. I've told my following from day one, if you ever see me try to sell you something, I want you to see me in person. I want you to punch me in the face. I'm not doing nothing like that.
Yeah, I there's a place to sell things, but it's when people sell courses or try to show you how to trade in a way where they're promising things. It's exhausting to watch because, like you said, a lot of this is screen time, guys, and how you see the market. And no one's going to show you some 90% win strategy edge that's going to make you feel like you're not scared of the market, like it doesn't hurt to go in a trade. And that's what we're all searching for, I think, at a human level, is we don't want to feel the pain of losses. We don't want to feel the pain of unknown. So we do everything we can to avoid it. And unfortunately, our monkey brains go towards, how can I completely eliminate the pain? And you can't, right? You just have to learn to deal with the pain and make good decisions with the pain.
Trading for Science says even Grok can't find the 90% trade. Is there, do you think there's a strategy that exists that wins at 90%? I mean,
oh yeah, risking your whole account.
They're out there, but you know, it's one of those things. I don't know. I'm not a huge risk to reward person, but I do think risk to reward does matter. You know, you need to, if you
need to stretch the trade, like get it to where you think is a good high probability destination. It's just being reasonable. You don't want to be unreasonable and be like, oh, well, look, let me count my P&L. And if it goes 10-1 and it goes to this area, I'd make $14,000. And if I do $14,000 every day for a year, I'll have this much money. Like, don't go down that road, guys. Your brain's going to always want to go down that road. And something in the middle is what works.
I had someone in my chat who would get in there and they would say, a couple of people actually, they would be like, oh, I'm down 100 points on this trade. And I'm like,
hopefully 1 micro.
Do you not feel like you're not wrong at this point? So, because like, to me, that's the thing, right? You know, every trade has to have an invalidation point. And I think it's less than 100 points. So yeah, it just
depends, right? I guess it's the time frame.
I guess
if you're swinging or something, that's a different scenario.
Different. Yeah. But if you're a day trader and you're looking for 15 or 20 points, you should not be taking, 100 points in drawdown. It's just insane. You should just cut it and look for a better spot.
And don't keep doing that and then reassuring yourself that I'm doing it right because it works sometimes. Because a lot of people are trading prop and then they'll reset and then they'll just keep resetting until it works. And what do they remember at their end? They're like, oh, well, the last time I did it right,
it worked.
And now you really have messed with your head. Resetting aggressively is like the worst thing. Don't do that with us, and don't do that with other prop firms. It does not teach you something that's going to give you any kind of consistency long term. And when the risk is, let me just put a couple more coins in this video game to reset it. That it just doesn't work, guys.
Yeah, the number one thing that I've learned is trading is all the mentality side of trading, like being able. So is it hard to walk away when you're green? No, you can walk away when you're green. It's 10 times harder to walk away when you're red. And a lot of times, let's say if you just eat that $300 or $400 loss and you come back the next day, you have a nice clean trade, you get the $400 back. But if you don't walk away, and let's say you end up hitting your daily loss limit or you blow the account, and then the next day you come back and there's that nice clean price action and you have that green trade, then you just realize you're like, man, if I had just walked away yesterday, I would literally just be back at break even. Instead, my account's gone, or I hit the daily loss limit, that sort of thing. So the ability to walk away when you're red is a huge deal. I'm
you got to practice.
Yeah, I was going to say, I'm still trying to master that myself. I still have days where I'm like, one more trade can't hurt, right?
Because it works, right? It's like
sometimes it'll work.
Sometimes it'll work, and that feeling of randomness and random possibilities is exciting, and it's sort of a, what's in the box. Maybe it's a win, maybe it's a loss, but I want to know. But you have to exercise that. So like those are awesome sentiments. So come up, everybody, with like actionable steps. It's like, cool, I need to walk away for the day. All right, what are you going to do to make that happen? That always has to be. It has to be a yin and yang, not I suck at psychology. I know what I should be doing. It's like, cool, come up with an action plan of steps, a checklist, whatever it is, so you can actually get to that goal, and just do that for everything. And also, easier said than done, but that's what you should be thinking.
One of the ways that I do also look at it is like, instead of being like thinking of it in terms of like, oh, I lost 400 a day. I think of it in terms of like, okay, I lost 1 day of work today. Whereas if I continue to take losing trades and I could wipe away 2 weeks of work, right? Mm-hmm. To blow the account, I could eliminate 10 days of work. Whereas if I just walked away, it's just 1 day.
I always joke it's harder than dieting, because in a diet you can crash over the weekend and eat a whole cake, right? And you'll get sick and stuff. But like Monday comes around, you're like, I'm going back to the gym. You're not going to have a big drawdown on your, or uptick on your weight P&L, right?
That's true.
But with trading, you could do a weekend, or a Tuesday stupid overeating, and now you've literally ruined your entire year of dieting.
Just destroyed it.
So it's so much more important in trading, and I would say trading is even harder than dieting. It's the risk is a lot higher. It can happen a lot quicker. But
for sure. Yeah. Trading is definitely one of the hardest things to do. It's definitely not a get rich quick scheme, which a lot of people think, but it's just definitely not. It takes time, it takes years to become successful. And one of the things I like to say is like, you can't compare yourself to other people. Some people will be like, oh, I saw John get a payout in 3 months. Okay, well, John learns different than you do. It might take you a year. It might take you 2 years, 3 years. You only fail when you quit. When you give up and you quit, that's when you fail. So that's why they say, 90% of day traders fail. Well, that's because
they run out of money.
They run out of money, or they give up and quit. So,
Cool. So we're going to go to some questions, and also, so we're going to spin the wheel, but if you haven't had a credit for us, if you just signed up for the giveaway today, we decided if you haven't got a credit, we'll give you $20 credit. So you can use that however you want. Don't feel bad if you don't win the $200 credit, because you'll get a $20 one. And that's enough to get a practice account with us. You can use that, do all your journaling in our system, work on your setups. Don't spend your money, waste your money on assessments yet. If you're not ready, do that, track your results, see what you're doing. It'll have everything in there for you, the platform, everything we got going on. And then when you're ready, move up to an assessment. But either way, use the $20 however you guys want. What other questions we got?
My dog's over here trying to bark.
It's okay.
He wants to join the stream.
Yeah, he wants the $20 credit. He messed up. He missed it. What's your go-to scalping strategy for ES during the New York Open, including stop loss placement? I think we covered a lot of that. He doesn't do ES. He does NQ.
Yeah, I don't trade.
If you watch back in the video, his stop loss placement tends to be about 10 points.
Yeah, it depends. If it's an inversion, I mean, then the 10 points sometimes not going to work. So I mentioned I took a 25-point winner here this morning. So 25 points from here to there. So obviously my stop loss was kind of about the same, right around 25 points.
Right.
So just kind of below the body of these 5-minute candles. And on an inverse play, your stop out really is a close back below. So if price kind of pushed back below there and closed, then I would have just got out, even if it had not taken me out down there yet. So
right. So you're obviously you're seeing that as sort of it's points against you. If it starts after it fills those gaps, it starts reverting. And if it reverts through enough of them, that was the sort of the intuition you have there. It's not a hard rule, but
just get out.
Get out.
Well, some gaps are going to be larger, some are going to be smaller, right? So you have to kind of adjust for that.
All right. What else we got here? Futures desk, you rock. Cool. Yes. The answer is yes. And thank you.
Max wants to spin the wheel.
Oh, we'll get there. We'll get to the wheel, guys. Don't worry. We won't forget. Question. You mentioned that in the first year of trading, you lost 35K. What happened or what changed that enabled you to recover from such a significant loss?
So taking a step back and recognizing that buying 7, 8, 9 evals in a day and just throwing money at it is not the way, right? My thought process back then was, if I could just get funded, I'll get a payout and it'll all be worth it.
Just get that first payout and it'll be huge.
Not realizing that, and again, I had no one in my ear, no one saying, hey, maybe you want to get on a sim, maybe you want to, you know what I'm saying? You can put a little skin in the game, get a cheap eval if you need to, if you need a little skin in the game. But that was the main difference, just realizing that I needed to kind of take a step back and find a strategy, because I've went through them all, guys. I've went through them all. I found what works for me. I was trying to do the plug and play thing where I would say, Joe Blow over here is doing it this way and he's making money. I can do the same thing. But like I said, my personality is not the same as Joe's. And so while he's over there holding for 2R and he's only got a 55% win rate, but he's making money, that doesn't work with my personality. I need 70, 75% win rate. And I need a 1R quick 1R trades where I'm going to be in and out of the trade quickly. So just recognizing those things eventually and, pivoting right into find what works for me. So, and
scalping is a great way to understand how the market moves and learn how to cut your losses quickly. A lot of kind of larger traditional trading firms, they scalp you early. So that's what they get you going into. They're like, I just want you to take 2 trades a day, and they're scalps. They're small, they're short moves. You're not taking, a ton of trades and maybe when you're first starting, but learn to take 2 trades, learn to wait, and just take a small move and get that feeling of understanding where to get in, when to get in, and what risk management is all about. And then you can turn that into an entire career like he's doing. Or you can go towards that. I'm okay with the 30-40% win rate and much bigger R&R, and you're comfortable with losses. That's totally good.
Yeah, there's nothing wrong with that at all.
Nothing wrong at all.
It just doesn't fit my personality. It's just not the person that I am. So
sure. Oh. Yeah, he mentioned before, by the way, if you just zoom back, he took that huge loss. He's in the black now. He came back from it. He took a big risk on what he did, but he got his shit together, and he's the Mythodical Man. So
Max said he wants to have it. He's making a guest appearance here as well.
Oh, there's Max. He looks like he's wishing he didn't speak up because
he hates to be picked up. But I do it for the stream.
Good.
I do it for the stream.
Sorry, Max. We'll let Max spin the wheel though, for sure. He can he read the names of the winners?
Yeah. He'll just say woof. Bark, bark. I don't know.
There's the wheel names. Eventually we're gonna break this site, I think. All right, so this is what we do. Since we don't like to butcher the names because it's unprofessional, I'm going to let you read the name out loud.
You let me read it?
Right, I'll let you read it so you can butcher the name.
Perfect. I'm pretty good at this.
All right.
And the winner is not Coach Fred. Not. He hasn't stopped yet, Coach Fred. I'm just trolling you. Who did it say?
There you go.
Yusuf Admusa. Yusuf Admusa.
I'd say you nailed it.
Pretty close.
You'll be getting an email if you win the wheel here, Spin, from Raj with the credit shortly.
He won last week. Aaron Shaw.
Nice. Did he really win last week?
I don't know.
Raj, do we need to spin again? Okay. Yeah, we're going to pick again.
Sorry about your luck.
Happy about it, but sorry, Yusuf, if you won last week. That's the rules. That's not fair. Let's give everyone a chance to trade.
Oh, let's see. Sarab Raj.
All right. I think we got a new one.
Good enough.
Cool. Look, Vala's in the
what up, Vala?
Chat.
Spin again.
You saw Vala was streaming with us this morning on the stream.
Yeah, I tapped in for a few minutes. I didn't chat, but I did tap in.
All right. And, looks like he went up to you. He chatted.
Yeah, that's what he did. Yeah, I was on his stream. I didn't know he was. I didn't realize he was over here. So, yeah, I have a rule. I'm really bad about watching other streams while I stream, and I'll chat and stuff. But I found myself missing trades, and so like until I get my funded stuff out of the way, I tend to wait to jump into.
Yeah, I'll watch replays of certain very specific traders that might review things.
Yeah, me too.
Later, which is always fun because you're like, oh yeah, I did kind of see it in that perspective, and might take a couple notes about it and research it. But yeah, watching that while I take trades would be.
The fun thing about the replay, watching the replays, is you already know what's going to happen, so you'll be
like watching a football game.
Yeah, like don't long right there.
It's so obvious.
Yeah, it's going to go down. So
right, yeah, absolutely.
I actually did that last week when Vala took that one loss. We're going to bring it up for you, Vala. He's like, no, don't stab me again.
Raj, can we showcase that loss, please?
Yeah, when he took that one loss, do we have a clip? It was the replay, and I was like, man, this thing's going down like another 100 points. I hope he gets out. So.
Oh, man.
Well, at least he did cover.
I'll have to go watch that one. It wasn't on ESPN, so I must have missed it.
Yeah. He was actually live on the Futures Desk.
Okay, I just missed it then.
I think
I'll check it out. We'll showcase it. We'll make a short out of it, and we'll promote it on YouTube ads.
But it's the only loss he's had in 2 years. Just kidding.
Yeah, he's one of the 90% win rate guys.
90% win rate guys. Yes, yes. So
yeah, we should get the two of you guys on trading in the morning together.
Yeah, anytime. I mean, I always have a good time when I trade with other people. It makes the makes the day go by a little faster. I did a 12-hour stream on Monday. So 12 hours. Yeah, I started at 1:45 a.m. Eastern and ended at 2 p.m.
So are you taking trades then, or were you just playing poker?
Oh no, yeah. I traded the entire time. Yeah, and it was a dreadful price action day, but hey, we got it done.
You're a better man than me. You can take NQ trades in the middle of the night.
Oh yeah, I love trading Globex and Asia. Actually, I've gotten extremely, for whatever reason, I don't know what it is. I've gotten extremely good at it. So good. It's just more of it's the same thing where you just take trades based on chart time. And so after a week or two of like watching the Asia and the Globex opens and sessions, I'm able to read it.
Do you adjust your strategy at all, or are you just slowing down the time? Okay.
Yeah, I'm not using inversions at all on that. And
what's that look like then? That's interesting.
It's more or less just where you think price is going, because in those times, it just kind of grinds towards an area. So
you're looking for like sort of the boat to eventually get there, that kind of a move,
right?
You're not taking like little, very quick like liquidity run.
Yeah, I still take a scalp. I'll still take 10 points, but if I know what direction price is kind of going, I kind of show you one, I guess, from let me show you one from the open yesterday. This was one that I took it open. So right at where's yesterday's? Am I missing it? Oh, here it is. So we closed. This is not yesterday. I forget I'm on the 5-minute chart. Hold on, let me get to the 1 minute. You don't have to go that far on the 1 minute. Or on the 5 minute. So let's see. Where is 6 p.m. yesterday? So basically yesterday going into close, I was looking for us to run the 613 level. I had that 613 level marked out. We had inversed the hourly. We inversed the, was it 13 or 26? Hold on, let me think back here. 616.75. So if we scroll over here, we can see right there.
Gotcha.
So I was kind of
levels mapped out, and you were just watching to see how it was going to react.
Yeah. So when we opened at 6 p.m., I'm just looking for a pullback. So what did we get right at open? We pulled back. So I got long down here and just took that run right back to that level. Just nice, easy read. We had inversed the hourly. So I 100% thought we were going to run that level, and just pulled back right into that 50 EMA. I took the long, bam, just ran it right back to there. So there's still scalps to be had there. I'm just, a lot of times I'm trying to hold longer. I mean, I hold trades during that time. It might take 2-3 hours, but I'm in smaller size. Most of the time just trading a micro, where it's
you turn into a totally different person at night, huh?
You have to. Yeah, you have to. Sure. Because you can get wrecked just the same. Guys, we do have a bond auction at 1:00. I don't think it's not red folder, is it? I don't think
so.
Yeah, it probably won't do much.
No. Unless you trade the bonds. I got one guy in our live accounts. We're letting them do calendar spreads swinging. So he's probably interested to see what's happening.
Marco said, how many trades did I take in the 12-hour shift? Marco, probably like 20. I mean, overall, something like that. I mean, quite a few. There's going to be more opportunities, right? The longer that you're on the charts. Obviously there's dead times in there too, where it just doesn't make sense to take trades. So I took quite a few. I did not take 1,337 trades as Vala is trying to insinuate. Oh, I just took a few.
Okay. Right.
Yeah. Just
Vala takes, I think on average, rumor has it like 1,000 trades a day.
He only shows 1/2 trade a day.
Right.
On his stream, but we all hear the order field in the background.
Yeah, constantly. It's like a building for the drops coming up. It's just order filled, and then the drops hits. So I have a question. Somehow when I'm trading slow markets, which is London and Asia, it's better, but New York freaks me out, especially if you think the NQ freaks you out and you're trading the New York session. That's probably the case.
Switch over to ES, yeah, exactly.
Or YM even.
Yeah.
Pick a slower market, and it's going to have those basic market mechanics that are happening. You'll get less heavy random liquidity runs. So those things that if you can read them well and you have a good edge with them, that's great. Like Mythodical Man here. Most of the time, though, I would definitely recommend ES, YM. Trade a slower market. Don't worry so much. Like usually on those markets, if you take one tick below, you're okay. You don't feel like, oh, it just whipped me out. You get that a lot more on the NQ and you're wrong. It'll whip you out pretty heavy. ES will give you a better time.
And I do think that those slower markets respect levels a little more. It just may take you a little bit more time to get 5 points, than it is on the NQ. But if you're used to Asia and London, then you should be that should be your expectation anyway.
It's still faster than Asian or London on the NQ.
Yeah,
you trade ES at the New York Open, but also let price action develop a little bit too. It's worth it. Sometimes it's in your zone, and those are your levels, and you're taking the trade. And that's okay. But oftentimes, waiting 15-20 minutes after the open to let things settle down a little bit can be a good thing. Again, there's edge in taking trades as the market opens. There's nothing wrong with that, but just broaden your thinking about what you should be doing. NQ's streamed a hell of a lot on the internet. Everyone talks about the NQ. Probably 90% of the traders that come to us trade the NQ or MNQ. So it's trendy, if nothing else, too. So just keep it in perspective. What works for you? What market works for you? It doesn't matter what other people are doing. Have a reason to why you're trading the NQ if you're going to trade it.
Exactly.
Come here, Josh. I will whip you. That must not be directed at me. I think it's a different Josh.
I don't know. I was wondering about that. I was like, man, I wonder what kind of relationship Vala has with Josh here, where he's talking about whipping him. So
yeah, we can't talk about it on this stream. Just join Vola's OF.
He started it up. All right, good deal.
Thanks for the advice. Should stick with slower markets. We'll trade. Great. Cool. Awesome. Anybody have any other questions? Here we go. Can you explain draw on liquidity? I never heard of that term.
Yeah, sure. Draw on liquidity is just simply where you expect price to go. So draw on liquidity is like if you're looking at the higher time frame, just kind of a swing high or swing low. Why did I think the 629 level was pretty solid? I mean, it's just yesterday's high, right? 629 or overnight. It's the overnight high. And we had relatively equal highs right here on the 5 minutes, kind of a few little wicks right there. So And if you look at the hourly, like I said, I mean, if you're looking at the hourly, I look at it differently than maybe some people do. What do we have down here? We had a wick inside an hourly fair value gap, right? So this is the way I kind of read price. So once we manipulate lower and we take out this wick and we V-shape out of there, I now expect this low to hold until we at least reach this swing, because the market likes to work in waves. It doesn't just go straight up or straight down, right? So V-shape out of here. And then what gives me extra confidence that we were going to kind of move back up to here is that we inverse the hourly gap here. Now you can see we still pulled back. So once we inverse this gap, we push through this swing high. We pull back to equilibrium. So we pulled back to kind of 50% of this leg. And then we V-shaped again. And we had another fair value gap on the hourly chart that we inversed. So once we inverse that, that's when that 629 comes into play. So that's the next level that I expect us to go to. And that's
so the draw of liquidity terminology, where would you use that in a sentence here?
Me?
Yeah, I mean, would you say the draw on liquidity is, we know liquidity is there because sellers keep showing up. So liquidity is sellers, right? They're providing liquidity.
You think of it in terms of where people put their stops, right? So if you shorted here, right, this is where you're, and then price moves down, well, you're going to move your stop to break even. So your stop would rest here. So people's stops are in general liquidity. So that's what the market is looking for. Stops, or I guess it could be buys as well, but in general, typically it's just stops, you know.
Yeah, one way to look at it is those stops get hit and they're going to generate if there's enough stops, and they don't have to be actual stops. They can be conceptual ones. People are exiting their trade. All that is happening. We'll never know exactly what's happening because the market doesn't actually provide that data specifically. I know Bookmap tries to do some things.
Yeah.
But it's not, we're all still dealing with a data feed that has volume, price action, quote data, but it's not telling us stops. Yeah, but when you see that stop run, it creates a small imbalance that can tend to be corrected because a huge amount of buying activity went on, but it wasn't continued by more participants buying to raise prices even more. So waiting for those stop runs, seeing what happens, do buyers follow through? That can be an indication of, could it be that possibly the start of a reversal?
Yeah, and like I said, I like to take trades. The trades that I take have the highest probability at the extremes of the range, right? So the highs and the lows. Taking the trades in the middle of the range doesn't work out all that well for me. I still do it sometimes, but
you were talking about that fib trade. So you have that, kind of have a big swing. You're looking for like kind of that rhythm of pulling back 50% ish.
And we actually had a clean trade here. I didn't mention it.
It is, yeah.
But you can see right here on the 1 minute. So we pulled back to 50%. We had a failed pivot. So we tried to go higher, didn't work, make a new low. And then right here, we have a nice reaction right through this 1 minute gap. So that would have been my entry. Wasn't really looking for it. But this is an exact setup. If we're in the middle of the range, that I would look for. Again, there's no single gap in this leg here. See all these gaps? So you need a single gap in the leg. So when we manipulate lower and we create a single gap, that's now my entry. And then you just look for the next. You look for it to go back higher.
Right.
So that's kind of
I love how it's based in simplicity, but everyone remember it's not automatic. He can't create an algorithm overnight using a little bit of Pine script code and TradingView to make this work. It's his intuition, it's his discretion, it's his time on charts. So add your magic onto this and see if you guys I should say, something's working for you, stick with it. But looking at this, if you pieced it apart, figure out what works for you, risk wise, target wise, how are you looking at the structure for entry, all that kind of stuff. But yeah, it's cool. I like that. Simple. Well, Futures does come out with a playbook. So we do have a way to put all your strategies in our system, tag your trades in real time, your setups. So we do have something akin to a playbook. We do have some major changes coming to all that. It's going to be super awesome to further make it so you don't have to go to 10 different services and sites to focus on your trading. We will continue to bring in really cool features that you normally have to pay for elsewhere. into an all-in-one system. And we're pretty ahead of the curve on tech. We're very a tech focused firm. I'm even the lead developer on the project. So
nice.
So possible with Project X, you need CQG. Yeah, so CQG we don't have in the assessment, but we do offer CQG when you get to the live account. And it doesn't matter which account you signed up for. When we set you up in live, you let us know. We have CQG, we have Teton if you have Sierra, which is what actually most of the team at TFD uses. And then we can do Project X, of course, and Rhythmic, any of that stuff. So CQG with us does have a direct connection to TradingView and live, if that's what you want to do. Just can't do it in the assessment. The giveaway was done. Wait, so you can get transferred to live from Project X. Your live account is only on TradingView and not Project X. So when you get transferred to live, so you can choose either way. So we have Project X, which is TradingView based. And then when you go live, you can either continue with that, or if you wanted actual TradingView, we can set that up for you as well. So you'd go to tradingview.com, connect a broker. It would be our broker, which is Dorman on that side. And you're good to go. Myth is nothing but magic. True.
Let me see. Dynamic Herd. Let me try to help you right quick. Let me see how. Well, I can't disconnect. I don't know. He was saying he doesn't see the Project X. It's still a Rhythmic connection. Dynamic Herd. You just put in the username and password under the Rhythmic connection, and you should be able to get connected.
We have. He's also referring to our Project X. So if you signed up with us with Project X and you had Quant Tower, you could connect to us that way. There's another connection type in Quant Tower that's somewhat new, but you'll see Project X in the connection, and then in the dropdown, if you select the futures desk, you can connect to us that way as well. And if you're going to pick one or the other, pick the Project X route. It's a little less expensive for you as well as us.
Oh, I do see that. Nice.
And some, Rhythmic has a lot of good risk management, but you do have to run the R Trader and kind of dig into that to get there. Project X is a little bit ahead of the game on risk management features. So all those features that work in Project X for risk management apply at the account level. So if you're trading in Quant Tower, you'll get the same experience as far as it'll cut you out with risk. You could go in there in Project X and say, lock me out for the day, all that kind of stuff, time-based, product-based. It's easy to manage. And if you're with us, just reach out on the support desk and they can help you set up whatever you want.
Yeah, and that's an amazing feature to have there, to be able to lock yourself out and just
those guys at Project X are big on those features, and we love that they do that. When is TFD getting TradeAway Ninja? Not right now. We'll see. Right now, we're happy with our platforms. We'll see. We're always talking to groups like that. So. What is this one? What will it make journaling simpler or more sophisticated? It's going to make it more approachable, and then we're adding features. So there's going to be definitely cool features, and it'll be more sophisticated overall. It'll just feel a little bit more like, an Apple experience or something like that. We're gonna be refreshing the user interface along with. There's a bunch of really cool features that are basically cooked and done. Just haven't been deployed. We're just testing them in beta internally. I just don't see any Project X connection in Quant Tower. Could you pull up your connection window for me?
All right? I don't think it's going to let me show it to you because it's
okay. It's all right.
But I do. This is one thing I will suggest. If you're not on the beta version, I don't know if it will show you the Project X connection. So if you go to the settings to the gear at the top and you just click on general, scroll down to the bottom, there's a little icon that says use beta version. And then it should show you those connections.
Okay. I didn't realize it was still in beta, but it might be.
I don't know that it is. It's just for whatever reason, it makes you do that. Yours is beta version. Okay. I'm not sure what to suggest in Dynamic. Because I'll pull this over, but I don't think you guys can see it.
Yeah, you would have to reshare something different. It's okay. If you guys need help connecting or you want to see that, just go to our website and just open a support chat. They should be with you pretty quickly, and they can show you anything you want to see. Or if you're already set up, they can help you get it configured. I mean to ask, will Future Desk provide list of strategy that people can use so they can reach to pay out like win-win for, I wish it was that easy, guys. There's not a strategy list we can give you with a few details and you're good to go. The markets just don't work like that. If it was, we probably wouldn't have a prop firm, and we'd probably just all be making bank off the markets easily and not thinking about it. Realistically, strategies have to be, you got to find the strategy that works for you, and that's kind of been the theme of the whole video today. Find a basic strategy. You can use his. You can use right here. Use Mythical Man. Watch this video again. Watch what he's doing, and then make it your own and see if you can find edge in the market that way. Something that works consistently, that gives you a positive profit factor over time. That's all we can do.
Yeah, Jonathan, you should be able to use that on a Mac. I mean, it's web-based. Project X is web-based, right?
Yeah, Project X will work on a Mac, and it also will work on your phone. Not that I suggest trading from your phone, but there are occasions where, you're on your phone, you want to monitor your position or something, just make sure nothing's going crazy because you needed to step out. It does work there, but yeah, anything that has a browser, pretty much. Hey, Mr. Josh, I'll answer this one. It's about accounts. Was looking at different accounts, monitoring them, only difference. Yeah, I mean, the amount paid and then obviously whatever you're modifying on them will be changing. So all of our plans are based on the same underlining. You can adjust your plan to be whatever you want. When you go to our plans page and you see like the 4 plan types, those are basically just templates. You can adjust any of those, any of the parameters on them to make your own plan. None of the templates have anything special about it that'll lock you in or give you something specific that you couldn't also alter with one of the other plans. So we're just trying to give you a starting point. Like, here's kind of what most traders get. Here's what you might want to get if you're just starting out and you don't want to pay that much and you're willing to put more time and effort in to save on that price. But if you if you go to Raj, if you edit the plan, yeah, he's trying to zoom in so you can see it. But when you go to edit the plan, you can adjust those parameters, and those are the parameters that are just, we've set some defaults for you for each of these, standard, popular, to give you some starting points to work with. But yeah, adjust it. What I always suggest and what my team always suggests is reduce the contract size as much as you can to start with if you're not sure, and respect the draw. Again, it's based on your risk. If you're trading like Mythodical Man and you're trading minis because his risk makes sense for that, size appropriately for that. But don't overdo it, because when you get into the live brokerage with us, if you're doing well, we're going to keep bumping you up. Even if you got the starter account, you get the smallest account, smallest daily loss limit. If you're doing well, we're going to scale you just like if you got a pro account. We'll continue to scale you if you're doing well. We are trying to reinvest in traders as they do well in our brokerage. That's the point here. So this is our way of just getting you in the door and making you happy with the baseline expectation you want for size and drawdown.
Sean in the house.
Sean, what's up? Must be a friend of Methodical's.
Indeed. He came in second in the poker tournament last night. The poor guy.
Well, who was first, I wonder?
This guy.
Got to be Methodical. He's got the consistency. Will the current discount still be up in 24 hours? Yeah. Current discount ends in this weekend, so Friday or Saturday. So 24 hours, you'll be fine. Can we use AI trading? Yeah. Couple capacities, obviously, for AI trading. One is analyzing your behaviors in your trades and talking to it. Sure, go ahead and do that. Another one would be giving you an analysis in the morning based on AI. Another would be real-time decision-making based on some sort of algorithm that's in your platform. And another would be taking another step. You could sign up with Project X with us. I think it's $20 a month. You can pay them and get an API upgrade for access. And if you're a coder, you could write the API a direct algorithm using AI against the API. And we allow all that. Again, we're very developer tech focused. So the idea of not leaning into modern tooling and more semi-automated and or automated trading would be missing what's coming down the curve here. So definitely we fully support automated trading, whether it's AI or not. As long as you guys, the big thing is, we're CME partners, members. So follow the CME rules, follow CFTC rules and laws, and US laws. We're good. We're not going to inhibit edge. Okay. Unless we have any more questions or you have anything else you want to cover, I think we'll hop off. It's been a good stream. Appreciate you coming on.
Hey, I appreciate you guys having me.
Yeah, it's awesome. I'm going to have to stick Vala and you on the morning.
Yeah, well,
one of these days we'll figure that out.
Chop it up, just as long as you guys are okay with a little, rowdiness.
Oh yeah, we're ready.
So
let's do it.
All right, sounds good to me.
All right, thanks, man.
Appreciate you guys.
All right, thanks, guys. If you have any more questions, just hop in our Discord channel or support chat. Always there, happy to help.